baby. Honest just got cooked. Welcome back, Strongman Personal Finance. We're going to cover the earnings of the Honest Company, which has gone up a little bit since it bottomed back in the conclusion of the clown market. And then we're going to go over the earnings of Block. And the only reason I want to cover this is because it rhymes with something that I have between my legs. Anyway, welcome back. Let's dive right into the Honest Company's earnings. So first of all, if we go to the Honest Company, and remember, this company was shilled by Jeremy LaFave. Never forget that. Yes, some of his stocks are up year to date, or maybe over the past year or two because of the rally, because of AI. But remember, he was shilling this stock when it was $8, $9, $10. So anyway, it's down 17% on the day because of earnings. Let's see the price movement over the last 5 years, down 76%. Now, I remember people talking about Honest again because, it was trading at about $3 and then it had this insane freaking rally. And of course, all the grifters that initially pumped this stock had to start talking about it again because it got retail attention. And of course, the stock topped out at $8.57 and it's all the way back down at $3.74. How unfortunate. So let's see what the earnings were all about. The Honest Company, a personal care company dedicated to creating cleanly formulated and sustainably designed products, reported results. Revenue of $93 million increased 0.4%. Revenue increased 0.4%. That's a decrease when you adjust for inflation. Gross margin of 40.4%, expanded 2.1%. Net income profit of $4 million. Wow, they turned a profit. And adjusted earnings before interest, taxes, depreciation, and amortization of $8 million, which increased by $22,000. So let's look at this, okay? Revenue growth was a total freaking disaster. This is not a growing company. This is a peaked out company. This is a clown company. The only reason this was popular was because Jessica Alba. I will say that 100,000 times. Jessica Alba was hot, and supposedly all the millennials are now into like clean diapers, apparently. So that was the bull case for Honest back in the day. And it doesn't seem to have worked out very well. So we know revenue's basically flat. We know gross margin has increased a little bit. That's your profit after the items that you sell before operational expenses like selling, general and admin, interest and taxes, all that. It's a profit on the items that you sell before other expenses. They actually increased that a little bit. They cut operating expenses by almost 4.8 million. So the reason they were able to turn profitable was because of huge cuts in expenses. Okay, and I can't knock that. They're profitable now. But if you really want to grow earnings per share over the long run, you got to grow revenue. Okay, there's only so many expenses you can cut. There's only so much gross margin you can achieve. You got to keep those operational costs low, or at least not growing as fast as revenue. And if you can grow revenue and keep those operational costs under control, maybe buy back shares, you can actually increase earnings per share going into the future. But it's very hard to do if your revenue's flat or actually down after inflation. So I guess the market wasn't happy with that. Okay, so revenue increased 0.4%, primarily driven by an increase in retail revenue, partially offset by a decline in Honest.com revenue. Who goes to Honest.com to buy stuff? Seriously. Should I go to Walmart? No, I'm going to go to Honest.com. Should I go to Amazon? No, I'm going to go to Honest.com. Our revenue growth was impacted by the timing of shipments compared to consumption. Translation, you suck. And, I mean, how much impact did that have? A timing issue? I mean, was a timing issue so bad that you had 0.4% revenue growth? Usually when you deliver a product, you recognize the revenue when it's when it comes into possession of the person that purchased it. That's when you recognize the revenue. So I guess it was a timing issue. In the second quarter of 2025, our shipments trailed consumption, partially offsetting the first quarter of 2025 result, where shipments were ahead of consumption by 5 percentage points. What was our revenue growth for the prior quarter? 12%. Okay, so it's fluctuating freaking everywhere. But so what are they probably averaging out if you normalize it? 6% revenue growth. If it's normalized, I mean, that's okay. That's a little bit above inflation. Tracked channel consumption for the company grew 6%, outperforming the comparative categories, which are up 2%. Consumption for the company's products at the company's largest digital customer increased 26%. Wow. Gross margin expanded 2.1%. The growth was primarily driven by a change in inventory reserves, partially offset by tariff costs. Okay, good job, Trumpy. Operating expenses decreased $5 million. Operating expenses as a percentage of revenue decreased 5.3%. The decrease was primarily driven by a decrease in selling, general, and admin expenses, partially offset by an increase in marketing expenses. So what do they fire a bunch of people? Okay. So we know net income was $8 million, so they actually turned a profit. That's fine, but their revenues reaffirmed full year 2025 outlook. Revenue growth of 4 to 6%. That's kind of weak. And adjusted EBITDA in the range of 27 to 30 million. So okay, total revenue growth year over year, but that's definitely slowing down. Let's look at the prior years. So in prior years, especially in 2020, look at that, 27% growth. Wow, that was so amazing. Oh my God, honest is the future, bro. And then ever since 2020, the revenue growth rates have definitely slowed down. And now they're at the point where they're almost matching inflation when you average it out over the year. So not too hot, okay? But hey, they turned a profit. They made some money. All right, so let's see. So we know they increased their gross profit. It was like an accounting entry, basically a change in inventory reserves. Selling and admin, they cut about $6 million of expenses. Marketing, they increased spending by about $1 million. And R&D, they increased by about $200,000. Okay, so basically they just had a bunch of cuts to selling, general, and admin. They're definitely focusing on cost cutting in that one specific category. That gave them operating income of $2.8 million. And they also had interest and other income of $1 million. So almost 25% plus of their profit came from interest from securities on the balance sheet. So, wow. Other income. Well, we'll see what that is in the statement of cash flows. Okay, so they had earnings per share of 3 cents. So you buy the Honest Company for $4 and then you got 3 cents. You give me $4 and in 1 quarter I'll give you back 3 cents. And they're not growing revenues that fast. All right. Share count. Wow, they've increased shares precipitously. So year over year, shares have increased by about 10%. All right, let's look at their balance sheet. So cash and cash equivalents, they got $72 million of cash, $45 million of receivables, $95 million of inventories. They're stacking up inventory there. That's an increase of $10 million over the last 6 months. Let's see. Property, plant, and equipment went down. Leases went down pretty significantly. I wonder if they maybe closed shop in some places. Small amount of goodwill. Let's look at short-term debts. $53 million versus $220 million of short-term assets. So nothing dangerous there. And no long-term debt except for long-term lease liabilities. You have to record leases on your balance sheet. So their balance sheet isn't that bad. Okay, not that bad. They got plenty of liquidity, and they don't have a lot of, insane long-term assets that are intangible. It's mostly property, plant, equipment, and leases. Okay, let's see. Let's go to the statement of cash flows. Stock-based compensation is down pretty big. So year over year for the trailing 6 months, it's down by $5 million. Okay, so that was that the cut? Stock-based compensation? Oh, we're cutting, bro. Yeah, that's a huge drop in stock-based compensation expense because the stock's gone down so much. Hey, the company saves money because, the stock collapsed. All right. Yeah, it looks like they had they plowed about 11 million into inventories for this quarter versus 766 million or 766,000 for the prior year. So that's a huge increase in inventory spending. So they had negative operating cash flow, but that's because they just basically bought a ton of inventory. I wonder why they really plussed up their inventory. Could it have been Trump's tariffs? I don't know. Yeah, it was. So yeah, they definitely went all in on trying to front load the inventory before the tariffs took effect. So that's why they had negative operating cash flow. Not really much investment in property, plant, and equipment, and they generated about $450,000 from stock options from employees giving the company cash in exchange for stock options. So overall, they did turn profitable. Their revenue growth was hot freaking garbage. They plowed a bunch of money into inventory, which caused their operating cash flow to go negative because of Trump. This is a distortion. But overall, like their guide's not that impressive. I mean, 4 to 6% revenue growth. The reason this company was profitable is because all the clean stuff is taking over, bro. So that didn't turn out to be the case. And a big drop in their expenses on their income statement was because of stock-based compensation. That was the biggest cut by about, 5 million? Pretty big drop in 6 million. Pretty big drop in stock-based compensation. So that's honest for you. I guess the market didn't like either their earnings or their guide, but the stock is basically sold off to where it was before. I mean, this company, was all the rage for the certain YouTuber a couple years ago, collapsed down to $1.24. And now it's rallied a little bit. And of course, analysts have a price target of $7.38. We'll see. Let's look at the valuation, bro. So a slow revenue grower has a forward PE of 53. And they don't have a price to free cash flow or operating cash flow because the last quarter was negative. So because of front-loading tariffs. But hey, the stock went up recently, even though it collapsed a couple of years ago. Okay, so that's the honest company. Got a little cooked there, but this company is going to be fine. This company isn't going anywhere for a while. I don't see any imminent risk of bankruptcy. So don't freak out about their negative cash flow. That was just front-loading tariffs. All right, next we're going to look at one of my favorite companies, Block, because it rhymes with Block. And one thing I don't like about this company is Cash App. Cash App is very sketchy. There's a lot of scams that go on in Cash App. Okay, so let's see what the stock did. Block, my God, up 5% after hours. Okay, how's the stock done? Okay, so the stock was all the rage during the clown market, and it's basically never freaking recovered since then. Okay. All right, let's read. Square gross payment volume grew 10% year over year, and Cash App gross profit grew 16%, accelerating as we exited Q2. Our focus on products that can drive network expansion is already paying off as we started rolling out pools on Cash App. What is pools? What is it, gambling garbage? Our shipping velocity has accelerated. I'm confident in our ability to sustain strong growth. Cash App's unique asset. You could buy crypto and you could do your taxes on Cash App. You're kind of a clown if you do your taxes on Cash App. I'm just going to put that out there, okay? Cash App is building the financial operating system for the next generation. Yes, Cash App is my number one source for financial operations. We want everyone to run their financial lives on Cash App. How about you go to a regular bank or maybe use like Vanguard or Fidelity? I don't know. Actives under the age of 25 have higher paycheck deposit attach rates. People are sending their paychecks to Cash App. What? And a 40% higher Cash App card attach rate. Teens are central to our next generation strategy. Yeah, they're appealing to a bunch of dummies, basically. And nearly 80% of parent or guardian-sponsored teen accounts have a Cash App card. I don't think I'm going to give my kids a Cash App card. How about a regular bank? How about, I don't know, Bank of America or USAA? Whoa. Our long-term strategy is expand the depth of our ecosystem across these capabilities. Wow. Freaking amazing. Okay. Simple tools that make it easy for customers to transact in Bitcoin. Wow, they're really doing everything. They're trying to get into everything with this company. So let's look at some of the metrics. So gross profit grew by 14% year over year. Cash App gross profit grew by 16%. Square, which is more legitimate, grew by 11%. Operating income, 19% margin. Net income of $538 million. And adjusted EBITDA, $891 million. Okay, let's see. Oh my God. They're getting the buy now, pay later. If you're using buy now, pay later, you are a broke loser and you should not be using it. Okay. If you can't afford to pay it in cash for like a regular item, like a computer or a microphone or some smaller item, you should not be financing it with buy now, pay later. The only time you're allowed to borrow is if you're buying a big item like a car or a freaking house. And hopefully you get good financing. Do not use buy now, pay later for a freaking burrito. Ugh. All right. We launched Cash App Afterpay, including post-purchase buy now, pay later, and pay in 4. Oh, I can just 4 easy payments, bro, until you miss a payment. And we're bringing more Afterpay merchants into the Cash App ecosystem. In July, we started making offers on Cash App Card more personalized to help people save at the places they're already shopping. Wow. What are they doing here? We also testing higher borrow limits for paycheck deposit actives to drive increased conversion and incentivize millions of our most engaged customers to make Cash App their primary banking platform. Why are you borrowing? Are these payday loans? Is that what this is? Borrow origination volume grew 95% to 18 billion on an annualized basis. Jesus. That's so bad. As of June, we had 2.7 million paycheck deposit actives. Good Lord, this is so bad. Do not use Cash App for your bank. Making Bitcoin everyday money. The next generation of consumers has a different relationship with money and wants the option to use Bitcoin and other forms of payment as part of their finance. Nobody uses Bitcoin for payments. It's for speculation. Who uses Bitcoin, unironically, for payments? If you think it's going to go up, why would you spend it? It doesn't make any sense. It's inherently deflationary. It's got a fixed supply and the economy is going to grow. Hopefully. So if there's more production but a fixed supply of currency, that's deflationary. So why would you spend it? Millions of people have used Cash App to buy and sell over 58 billion in Bitcoin, and they're taking a little fee, aren't they? God. Let's see. What a freaking joke. Here's Sack Dorsey. All right, and they talk about Square. I mean, Square is a little bit more legitimate. I don't really have huge issues with Square, but Cash App is just gross. In July, we started rolling out Pools, a group of peer-to-peer product that makes collecting and managing shared money simple. Approximately 60% of adults pool money to manage shared expense. You're getting into lending? Peer-to-peer lending is not a good idea. I had a small amount in a lending club. You're better off in treasuries or the stock market than lending to peer-to-peer. And who knows what their due diligence is. Oh, yeah, put your money in a peer-to-peer lending pool and lend it to a bunch of morons. Now, Cash App will enable proactive contributions, allowing groups to fund collective, what is this, communism? Collective expenses in advance and reducing the upfront individual cost. What is this? We estimate that nearly 20% of our customers received at least a portion of their pay in cash, and we've more than doubled paper money deposit limits to better serve them. We believe increasing transaction limits allows Cash App will enable customers to conduct more of their financial lives, deepening engagement and loyalty. All right, they're getting into tap to pay. We're focusing on winning teens early. Oh, just when you sucker in the most ignorant people. Driving viral adoption through their social circles and giving them their sponsor tools to responsibly grow with Cash App. As of June, we have 5 million monthly active sponsored teen accounts on Cash App. Nearly 80% were Cash App card actives, and over 25% were Cash App Pay actives. Good Lord. No. Why? What parent is putting their kids in freaking Cash App? Oh, son, you could buy some Bitcoin in there and grow your wealth. Oh. In the second quarter, we launched Pay Monthly for single-use payments. Single-use payments lets customers split purchases into installments at merchants that advertise on the Afterpay app. And we are now offering greater payment flexibility with 6 to 12-month term options for higher value. Good God. Debt slave nation. Okay. So here's some of they're talking about their payment volume. Here's our guidance. We are raising our guidance to reflect the strength we are seeing across our business, giving out loans to morons and people trading Bitcoin. We now expect $10 billion in gross profit for 2025, reflecting growth over 14% year over year. We expect full year adjusted operating income of $2 billion or a 20% margin, representing 2% margin expansion. And we expect gross profit in the third quarter to grow 16% year over year. Okay, so they're growing profits, and they're doing okay on like fundamental metrics. I'm more of like morally opposed to this company. But okay, decent profit growth, decent guide. Earnings per share is growing precipitously. Their diluted net income per share was 87 cents for this quarter, compared to 30 for the prior quarter. And year over year, it's up more than double. Okay. Their adjusted diluted EPS, whatever that means, because they can do whatever they want, is up about, 50%? A little bit less than 50%? Maybe 35%, 40%? All right. Wow. Cash App. Do not use buy now, pay later. Do not put your kids in freaking Cash App. All right. Adjusted free cash flow. Year over year growth, negative 139%. Okay, so their cash from operations has dipped a little bit. So last year in the same quarter was $519 million. Now it's $374 million. Look at all these freaking loans. Look at all these freaking loans they're giving out. What a disaster. All right, here's their guidance. Okay. So let's see. Where do they grow their most revenue? So transaction-based revenue is up 6%. Subscription and services-based revenue is up 15%. Hardware revenue's down a little bit. And Bitcoin revenue's down about 18%. Wow. I thought Bitcoin was going to the moon, bro. Okay, I'm just seeing if there's anything crazy on here. Remeasurement gain on Bitcoin investment. Oh, look, they recorded a $212 million gain on stupid Bitcoin. Oh, wow, your earnings were so amazing. Their earnings would have been a lot lower had they not had that Bitcoin gain. What a freaking joke. God. Well, I don't know what to say. I guess Wall Street was happy with their guidance. But this is not the company I'd put my kids in, and it's kind of degenerate. All right, let's do some comments here. Thank you for tuning in, everybody. Oh, one thing, we got to do my grifts. Yes, I am a certified public accountant. If you wanted a free initial 30-minute consultation with a certified public accountant with over 8 years of experience in the accounting industry, going on 8 years, you can book a free consultation. All you got to do is click on the pinned comment. You'll see this. Then you click on the tax preparation link, and then you have this pull up. Watch it be broken. So this comes up, and then you click book a free 30-minute consultation here. Pulls up the calendar. You click free tax consultation, and you can book a free 30-minute tax consultation with me. We can review your prior year tax returns, and I can quote you for tax planning if you need tax planning, especially if you're a small business. You need to be making estimated payments, and if you don't make estimated payments, you're going to get cooked. And I can give you a tentative upfront quote for tax preparation for this current tax year and the next tax season, which begins January, February of 2026. Book a free consultation. Talk to me completely for free. We can talk about what you're doing this year. Make sure you're all your I's are dotted and your T's are crossed, and set you up for tax success. Because if you ignore taxes, you're going to get your cheeks absolutely clapped. There's other things here. There's a free Discord in the bottom. You can join my Discord. I've got a book, Stop Being a Broke Loser. There's one-on-one consulting. You can get a sponsored video, $50. I'll do a video about whatever you want. I don't do stock price predictions or valuations. And of course, I offer bookkeeping services for small businesses. And I think I'm affordable, and I'm very good at what I do. So that's all my grifts there. All right, let's do some member comments. And it's members only. This is the link, by the way, if you want to check out some of my services. All right, members only. Permabull Moonman. Trade desk down over petty business. Aw. Why are you being dishonest? Because I'm a dirty liar. Dirty, stinking liar. Just joined. Who's Gil Slayer? I'm not sure. I think it's Hans, maybe. Is the CEO of Block named Blockhead? I don't know. Jack Dorsey. Pay Pigs. What's up, my little pay pig? That's right. That's right, little boy. That's right, boy. Give me money. I got too many fans. You're popular, Gil. You're popular. Everybody knows who you are. Oh, shit. I almost dropped my water. Checking in for my wagey. Why do you have a job, bro? Just buy crypto and you can quit your job. We'll watch the replay after work. Sounds good. So what's the difference? Are you from a meet doing stock market? Does this make you a grifter? I'm the biggest grifter in the freaking world now. But I actually know what I'm looking at, unlike other people. What's a cash flow statement? Let me see what Tom Lee said. I'll just copy what he says. Honest 17%. I had to change my hair to blonde so nobody recommended it work. I've never seen you in my life, good sir. How was Amit a bad guy? When you started doing the same content, reviewing stock, Amit is not qualified to review financial statements. And he chases hype for his own enrichment. Alan, am I right or am I wrong? Strawman has started making the same exact content he's calling out. Well, it's earnings season, Gil. I'm not going to cover this all the time. I'm giving you my honest opinion. I'm not fluff. I don't fluff my fans. Oh, I'm going to tell you what you want to hear. Oh, whatever you want to hear, my king. I don't do that. Which is going over earnings, reviewing stocks. Okay, so Gil's arguing with somebody. I've been trained to be a leader since birth. You, on the other hand, trained to be a clown. Holy smokers, my third member payment went out yesterday to Strongman. It's flying by. How many members you at now? We're at 45 members, I believe. It's okay. It's a nice little boost to the income every month. Alan Carlson named me some outrageous promises they have made recently. Stockmo clapped Strongman. No, he didn't. Alan, I'll name you an outrageous claim, Strongman, man. He said Palantir is a trash stock, and you will. That is dishonest. Palantir was at 30, 40, 50, whatever it was during the clown market. I said the stock was going to collapse, and it dropped all the way to $7. And then we had a bubble. Palantir is a bubble. 100%. If you are buying Palantir now, mark my words, your cheeks will get annihilated. Alan Carlson is admitting Jeremy Mishra stocks at 5, dude, such as Meta. What are these? I'm only doing member comments. Let's see. Be honest. Do single stocks make me look fat? Do single stocks make me look fat? Tee-hee, I'm a girl. By the way, Bitcoin revenue is it's complete nonsense. Bitcoin is complete nonsense. They should never have changed that accounting rule. Stockmo did lose my mom thousands of dollars, but I also see people thanking him. Well, we've been in a bull market. Everybody's making money. Everybody, unless you're just totally a clown like Khmer. Even Khmer's making money. Everybody's making money. And people are buying high beta stocks and they're beating the index. But what happens in a down market? They massively underperform the index. That's how you just buy high beta stocks. And you look like a genius in a bull market. All right. Oh, we got a super chat. Thank you very much, good sir. Bitcoin has no revenue. That is true. It is the only way you see the Bitcoin revenue or Bitcoin gain and loss is just fluctuation of Bitcoin prices. All right. Jack Dorsey's a communist. Is that true? What is your cardio routine, Master Strawman? I run 3 or 4 miles every other day, and some days I do the Stairmaster. That's my cardio. Whoa! Whoa! 5 memberships. Holy crap. We have 5 new members. Now we're up to 50. Thank you. I don't know how it works. Do you choose who gets the membership? I'm not sure how that works. But yeah, we got 5 new members. Awesome. So more clowns can get their comments answered. Thank you very much. I really appreciate your generous contribution. Look at that. $2 and then 5 memberships. Woo! 5 more pay piggies. That's right. Okay. Ryu, thank you very much. All right, guys. That was Honest and that was Block. Next, we're going to cover Stockmo and Chris Sane because I have to respond to Stockmo. I'm not happy with Stinkblow. I'm very unhappy with him. Anyway, I appreciate the $2 super chat and the 5 memberships. 5 memberships. That is sweet. Everybody thank this man if you're a new member. 5 pigs randomly select. Really? Is that how that works? Okay. All right. We'll see you in the next video shortly. Talk to you soon.